Welcome to the Friday edition of Tech Stocks Daily, folks. Hold on to your gadgets, because we've got a roller coaster of tech news for you. Today, we'll dive into Apple's turbulent week, from staggering stock prices and colossal $14 billion tax debts to their AI-powered iPhone 16 launch. We're also decoding the legal squabbles surrounding Endava, with multiple class action lawsuits hitting their stock hard. And Adobe, despite stellar Q3 earnings, faces an 8% stock drop. What's the deal? You don't want to miss this juicy roundup. Let's get into it. All right, folks, gather round because today's episode is a juicy one. We're diving deep into Apple, a company caught in a whirlwind of news. Get ready because we're talking overpriced stocks, massive tax bills, new iPhones, and AI drama. First up, let's talk stock prices. Is Apple overpriced? Well, it's a valid question these days. Apple is the crown jewel of tech companies, but its stock price is raising some eyebrows. Currently trading at 33.6 times earnings, it's significantly higher than the S&P 500's 22.6 times. Basically, some folks think you're paying a premium for those sleek iPhones and fancy MacBooks. Here's the scoop. While new features like improved battery life and marginally better cameras on recent iPhone models are nice, they just haven't been game changers. iPhone sales have been flat for the past few years, even with new models rolling out like clockwork. However, there's a glimmer of hope as Apple ventures into the AI universe with its new feature, Apple Intelligence. But will Apple's foray into AI be enough to justify that hefty stock price? Analysts remain skeptical, predicting modest growth rates of 2% for this fiscal year and 13% next year. So if you're eyeing Apple stocks thinking they're the golden ticket, you might want to think twice. Next up is Apple's $14 billion tax debacle with Europe's highest court. Yep, you heard that right, $14 billion. The European Commission accused Ireland of offering illegal tax benefits to Apple. Both Apple and the Irish government aren't thrilled about this decision, but Ireland will comply and collect the taxes. Critics are saying this sets a bad precedent, potentially scaring away big businesses from the EU. This tax saga is unfolding right as Apple launches its iPhone 16 series, which is packing some serious AI power. Apple Intelligence is being touted as a tech revolution, handling photo editing, real-time answers, and enhanced messaging right from your device. It's Apple's response to rivals like Samsung and Google, who are already deep into AI. However, the smartphone market is shifting gears, with more people holding on to their devices longer, putting a strain on companies dependent on frequent upgrades. And remember that consolidation phase Apple stock is in? Trading between $200 and $235, it's a waiting game for investors looking for another breakout. The stock closed at $222.66 after a slight uptick, meaning it's not diving, but also not leaping. Finally, let's brighten the mood with 3 reasons why maybe, just maybe, you should still consider buying Apple stock. Despite all the drama, Apple retains a loyal customer base, with 93% of current owners likely to buy another Apple device. Staggering, right? Plus, Apple's service sector is growing rapidly, becoming a major revenue driver. And don't forget, while the stock might be down from its July peak, Wall Street still sees potential, holding a bullish outlook with a target price of $247.22. So there you have it, a loaded day for Apple in the tech news spotlight. Is it time to sell, hold, or buy? Well, that's your call, but one thing's for sure. Apple never disappoints when it comes to giving us something to talk about. Get ready for a roller coaster of legal drama because Endava PLC is making headlines today, and it's not for launching a groundbreaking new tech product. Currently, 2 different law firms, Braunstein, Gewirtz & Grossman LLC and Faruqi LLP, are spotlighting Endava, urging investors who experience losses to get involved in ongoing class action lawsuits. Grab your popcorn, let's break it down. First off, Braunstein, Gewirtz & Grossman LLC announced that they're rallying Endava investors to lead a class action lawsuit, focusing on those who purchased or acquired Endava securities between May 23, 2023 and February 28, 2024. Their beef? They allege that Endava and its executives made misleading statements or failed to reveal critical details. According to the lawsuit, Endava's service demand was nosediving. Clients were bailing on or postponing projects, and this cocktail of issues torpedoed Endava's fiscal outlook for 2023 and 2024. Imagine being an investor and suddenly finding out that your golden goose, Endava, laid an egg. That's basically what happened when Endava's stock tumbled down 26.65 cents, a whopping 42%, to close at 37.17 on February 29, 2024. Not exactly the type of markdown you look forward to, right? Braunstein, Gewirtz & Grossman LLC wants aggrieved investors to visit bng.com/DAVA and take the chance to lead the lawsuit before the October 25, 2024 deadline. But wait, there's more. Faruqi LLP is also in the ring, echoing similar concerns. They're specifically reaching out to those investors who saw their portfolio shrink by more than $100,000 during the same period. Faruqi allege that Endava's executives were aware of their sinking ship, yet still portrayed a rosy outlook until it all came crashing down. This led to the infamous February 29th stock plunge, which definitely left a crater in many investors' wallets. Call Josh Wilson at Faruqi or head over to faruqilaw.com/DAVA to sort out your next steps before, you guessed it, October 25th, 2024. So why does this matter? These lawsuits aren't just headline fodder. They can shape how publicly traded companies communicate and conduct themselves ethically. Investors have the power to hold corporations accountable, ensuring transparency and fairness. And if you're an Endava investor, sitting idly by might mean missing out on the potential recovery of your hard-earned money. In summary, Endava PLC is caught in a legal quagmire, with multiple law firms rallying to rectify alleged misleading business practices. If you've got skin in this game, now's the time to navigate your options. Check out bganji.com/DAVA and faruqilaw.com/DAVA to know more, and reach out to the respective law firms to fine-tune your strategy. Stay tuned and keep your eyes peeled. You never know when the next tech company might be doing the courtroom shuffle. All right, tech enthusiasts, gather round because today's hot topic is Adobe, and boy, is there some spice in today's financial frying pan. Adobe's stock took a tumble today, dropping over 8%. Let's dive into the nitty-gritty details of why Adobe's stock got smacked around despite delivering a rock-solid third-quarter earnings report. So Adobe just reported its fiscal third-quarter earnings, and let me tell you, the numbers themselves look pretty sweet. Revenue hit $5.41 billion, beating analysts' expectations of $5.37 billion. Even better was the earnings per share, coming in at $4.65, whereas Wall Street was only predicting $4.53. By most accounts, Adobe had a stellar quarter. But hold up, don't pop that bubbly just yet. While Adobe raked in the dough, its guidance for the next quarter left a bad taste in investors' mouths. They projected sales for the fourth quarter to be between $5.5 billion to $5.55 billion, while analysts were expecting a cool $5.61 billion. And don't even get me started on their anticipated earnings per share. Adobe expects it between $4.36 to $4.68, but analysts were aiming for $4.67. It was the same story over in Adobe's digital media arm. Investors were betting on yearly recurring revenue to hit $561.1 million. Adobe, however, tempered expectations, aiming for $550 million. It seems Adobe's future isn't quite as dazzling as some had hoped, despite their boffo Q3 earnings. The market's response, a not-so-joyous sell-off, sending the stock into an 8% nosedive. Enter Jim Cramer, the ever-opinionated host of CNBC's Mad Money, who had a few bones to pick with the analysts being super critical of Adobe. Cramer highlighted that while Adobe's future projection might not be a journey to unicorn land, analysts were ignoring the solid Q3 foundation. Throwing shade at the haters, he said there's a middle ground between total euphoria and total skepticism, essentially preaching for a bit more moderation and maybe a sprinkle of common sense. Cramer isn't alone in being optimistic about Adobe. Investors like Jim Lebenthal also think Adobe's prowess in AI positions it well for ongoing success. Folks, Adobe may not have a shiny, glimmering forecast, but let's not forget it's still rolling out that AI tech pretty effectively. Overall, Adobe closed at $586.55 on Thursday before the hammer came down in after-hours trading. As of now, the stock has only bumped up 1.12% year-to-date. What do you guys think? Is Wall Street overreacting to Adobe's conservative guidance, or is there genuine reason for concern? Could Adobe's AI initiatives push them back into investors' good books, or is this a wake-up call for the old software giant? Drop your thoughts below, and let's chat about it. All right, tech aficionados, let's turn the spotlight onto Apple for a bit. So based on today's sizzling news platter, would I sell, buy, or hold Apple stock? Let's cut to the chase. My vote goes to hold. Here's why. First, Apple is navigating some rough waters with its stock currently trading at pricier multiples than the S&P 500 average. With analysts predicting modest growth of 2% this fiscal year and 13% next year, it's clear that the era of skyrocketing stock prices might be slowing down a tad. Add to this mix a colossal $14 billion tax bill imposed by Europe's highest court and stagnating iPhone sales despite all the new bells and whistles, and you might get a bit jittery about making any big moves. However, it's not all cloudy skies and rainstorms. Apple's loyal customer base is solid as a rock. 93% of current owners are likely to make a repeat purchase, a testament to their die-hard fan appeal. Plus, Apple's services sector is flourishing, accounting for a juicy chunk of revenue. And let's talk about their AI endeavors, like the Apple Intelligence feature, which could be a potential game changer. It feels like Apple is gearing up for a marathon rather than a sprint. While stocks are hovering between 200 and 235, and we saw a minor uptick to 222.68 there's no earth-shattering breakthrough on the horizon, for now, but you might want to hold steady. Historically, Apple has always found a way to innovate just when doubters are about to count them out. And let's not forget, renowned analysts still hold a bullish outlook with a target price of $247.22. In summary, my advice is hold your Apple stocks. It's all about weathering this current storm and waiting for those clear skies and shiny innovations to re-energize the stock price. But hey, always do your own research. This is the tech stock market we're talking about. Unpredictable, thrilling, and sometimes a roller coaster of emotions. So stay tuned, stay curious, and keep those fingers on the pulse, folks. Whoa, what a day on the NASDAQ. Apple's navigating choppy waters with overvalued stocks and a colossal $14 billion tax slap, yet it's still pulling the rule of hold due to its unbeatable brand loyalty and emerging AI ventures. Meanwhile, Endava stock is tangled in lawsuit drama, putting investor transparency to the test. And Adobe, solid earnings didn't stop a nosedive. but they're still pitted strong for future AI endeavors despite Wall Street's bumpy reaction. All right, fam, if you enjoyed this roller coaster of tech news, don't forget to like, subscribe, and share the tech love. Hit that bell so you don't miss our next exciting update. Come back on Monday for another blast of tech goodness. Have a fantastic weekend, everyone.